Hello and welcome to our video presentation. In this video, we will cover the decision process behind choosing to discontinue an algorithmic system. Before we get started, please take some time to view our risk disclosure. We are dealing with a hypothetical portfolio strictly for educational purposes. Remember that past performance does not guarantee future results, and that any presentation of systems in this video is strictly for educational purposes and doesn't constitute any trade recommendations, and that hypothetical results have inherent limitations, which you can read by going to our risk disclosure page via this link. Now let's get started. So the general question is, when do you discontinue trading a system? Let's suppose you're subscribing to an algorithmic system and it's starting to experience drawdowns. Do you ride the drawdowns through, or do you discontinue it? And if so, based on what criteria? In our previous videos, starting with one called How to Build a Portfolio of Algorithmic Strategies, we constructed a hypothetical portfolio. Our main goal was to show you one way to build a portfolio, while our secondary goal was to learn from the experience following that portfolio's performance. Now, one of our systems, one that trades the mini NASDAQ, is now offering us a valuable learning opportunity, namely, when to discontinue a trading system. Now, if you are following any of our previous videos, you'll probably remember that one of our key principles was to reconsider any system that exceeded its worst drawdown. Remember, worst historical drawdown is not an absolute limit, it's simply a benchmark. And in our example, the system we're about to examine is quickly approaching this negative benchmark. Let's take a look at the system description from our Algo IQ page. Take a look at the worst drawdown. Now look at the row right below that, where it says current drawdown. Although the current drawdown has not exceeded its worst historical drawdown, it's close enough, at least for us to consider dropping the system from our hypothetical portfolio. Now, why did we drop this system? First, it's important to understand that if a system's drawdown exceeds its historical worst drawdown, this does not mean that the system will no longer perform profitably in the long run. However, it goes against our rules to keep only systems whose losses remain above their historical worst, and any decision to keep any systems that perform poorly in such a manner that they get close to or exceed their worst historical drawdown, those systems would have to undergo a very rigorous reevaluation of performance. So let's recap. The worst drawdown is not a predictor, but a benchmark. In our context, as soon as a system reaches or exceeds its worst historical drawdown, it marks a critical juncture for reevaluation. In our case, we decided to just drop the system. And based on our rules in the current context, the system that we just dropped disqualified itself from our portfolio inclusion. So this marks the end of our brief tutorial. Thanks a lot for watching our video. We hope you were able to learn something from this exercise in building and following our hypothetical portfolio. If you have any questions, feel free to contact us at team@halifaxamerica.com. In the following weeks, we will post portfolio updates to continue our educational presentation on algorithmic portfolio construction.